Hello and welcome to the Legal Insight podcast by HHQ. My name is Zach and I'm your host for today. And this week we're at episode 28. Pretty remarkable when you take a step back and realize just how far this podcast has come. And when we first started this podcast series, none of us have imagined approaching our 30th episode soon. Right, guys?
Yeah, it's crazy.
Yeah. And 28 is a half marathon and more. And yet here we are still going stronger, still learning, still sharing what we've learned, and still pushing the boundaries of what conversations in the Malaysian legal tech, data, and fintech scene can look like. Now, today's topic is one that we're all particularly excited about because it sits at the intersection of law, finance, technology, and the future of payments in Malaysia. We're talking about tokenized money, a concept that is certainly up and coming, and one that many listeners may find unfamiliar, if not slightly abstract. Now, we all understand fiat currency, the physical cash in our wallets, though many of us don't use physical cash anymore, because we've also become fully comfortable with e-money, which we use every single day through, I don't know what apps you use. What's your favorite?
Touch and go.
Touch and go.
All the time.
Yeah,
Touch and go.
I'm a
So
GX Bank person because of their,
It's
great
good.
interest rates.
That's our clients.
Yeah.
Please use them more.
I love GX Bank, and there's a lot more coming out, like Right Bank pushing the
Yes.
boundaries
Yeah.
of AI finance
Yeah, amazing.
and so forth. Now, as the financial ecosystem evolves, we are moving into a new era of money, one that is blockchain native, programmable, and capable of moving across systems with unprecedented speed. This is the world of tokenized money. It is deeply intertwined with what many call Web3. And perhaps for the first time in Malaysia, this entire concept has been formally acknowledged and openly discussed by BNM, Bank Negara Malaysia, in its discussion paper on asset tokenization in the Malaysian financial sector.
Yeah.
Now, today we're going to talk about the different forms of tokenized money, CBDCs, tokenized deposits, and stable coins. If that sounds like a mouthful, we will unpack it in a simpler manner for you on the regulatory policy and technical considerations surrounding all of these things. And given the depth of this subject, as usual, we'll split it into two episodes, episode 28 and episode 29. So do stay tuned for those. As always, I'm joined by two handsome individuals who co-authored our Insight articles on this very topic. Ong Johnson, our head of technology practice group, and Lo Khai, the co-head of the technology practice group. Gentlemen, welcome back to the show.
Good to see you again.
Very good morning to you, Zach.
Yeah.
Good morning. Looking great, guys.
Likewise,
Looking
I like the
fresh.
shirt.
Thank you so much. And now let's jump right into the topics. Johnson, I'd like to start with you. I know you've been advising banks, fintech companies, and also institutional players for many years now. And in the recent months, lately I've noticed that there's been a special attention paid by banks on tokenized money, particularly following the release of BNM's discussion paper. And for many of our listeners, tokenized money, the concept is new, right? They may be familiar with tokenization because they've listened to our podcast episodes, but those without fintech background, they may not know what tokenized money is. So can you explain to us in very simple terms, what is tokenized money and how does it relate to the whole Web3 and blockchain ecosystem, right? And if you could perhaps offer a helpful analogy that would make sense to someone who've never touched crypto or blockchain before.
Definitely, very happy to. First of all, really happy to see you again. Of course, I think that this topic is going to be a bit dense, so it's going to be a bit technical, especially right now when we are talking about tokenized money. Tokenized money, I would say that is a very, very new concept, especially the one being recently introduced by BNM. Do allow us to go a bit slower, so that we are able to really dissect for the benefit of all the listeners here. In terms of tokenized money, I think that we can actually understand it through the analogy of financial evolutions. Just now you did mention about physical cash. So physical cash, I think that we can see that as the fintech 1.0. So at the very beginning, when we call it Web 1, basically that time we have our first version of fintech. What does it mean? It means that instead of me going to the bank to withdraw money, I can go to an ATM machine, one machine, and I just press my password, and then suddenly I'm able to get my cash. At that moment, that was fintech, because I'm able to actually access to money, access to cash using technology. And then there is first version, fintech 1.0. era 1.0. And then with the evolution of technology, we have internet. FinTech 2.0 comes about 2014 to 2017. There's a time that where we have a lot more access towards credit cards, debit cards, online transfer, and also e-money, as you mentioned earlier. That is the moment where people start thinking that, look, I may not need hard cash for me to make any transaction anymore. To be honest, right now I don't even bring cash whenever I go. I just bring my wallet, and then it's already sufficient for me to make any form of transaction. So that is the version of FinTech 2.0 that most of us we are familiar with. And today we'll be talking of the next generation FinTech 3.0, or what we are calling it, the Web3. Essentially, the whole concept of Web3 is really embedded on one concept called blockchain. In order for us to actually access, in order for us to actually make any transaction on blockchain, we need something. We need underlying liquidity in order for us to actually perform, to actually complete the transaction. And then in order for us to do so, we need tokenized money. Because whether you are having your physical cash or otherwise you are having online transfer, e-money, you are not able to access to any form of on-chain transaction. Because as mentioned, this is a whole new world. It's Web3, it's on blockchain. In order for us to make sense of all this thing, we will need a new form of money. And then that is what we are going to discuss today, is tokenized money. As you mentioned, it involves CBDC, tokenized deposit, and even stable coins. These are the three topics that we'll be discussing a lot more later.
Thanks, Johnson. That was pretty clear. So, Khai, just building on what Johnson mentioned, the moment this discussion paper by BNM was released, I know that your department suddenly saw an influx of inquiries, especially from banks and fintech companies, obviously, right?
Yes.
You and Johnson have been advising in fintech for many years, right? Fintech Law Firm of the Year for 2 years in a row, just saying. And compared to previous digital asset developments, this moment kind of feels quite different.
Yep.
Why do you think we're suddenly seeing this surge of interest from the banking sector, particularly? And what's driving this influx of attention right now?
Yeah, certainly. So in fact, on the very same day when the discussion paper was actually launched by the BNM, we actually scheduled to have a meeting and a sharing session with one of the major banks in Malaysia. So this just show how much interest there are in the space by the financial institutions in Malaysia, right? And the reason why they are showing so much interest, I think generally is because of regulatory certainty and also regulatory appetite. So prior to the discussion paper, of course, we have heard a lot of rumors, a lot of talks and chatters saying that Malaysia, the government, central bank may want to look into CBDCs, digital asset, money tokenizations. But there were actually no confirmation until the discussion paper was dropped.
Yep.
So the discussion paper actually signaled the appetite and also the openness of central bank, BNM, right, towards money, asset tokenization, particularly when it comes to tokenized money, your CBDC, your tokenized deposit, and also your stablecoin. So that naturally gave a lot of confidence to the banks and also the financial institutions to start to look into this area. Prior to that, I believe all the financial institutions, it's not to say that they never had any interest. They had interest, but it's very hard for them to justify and convince the board to allocate budget and to allocate resources to explore use cases in all this area unless they know for certain that it will be able to translate into something. So I believe that moment was there when the discussion paper was dropped, and that led to wheels rolling, cogwheels start to move, right? And of course, then people start talking to us, asking us, hey, how do we become asset custodian? How do we issue tokenization asset? How do we even tokenize money? What are the roles that financial institutions can play in this sector? So generally, we believe, or rather personally, I believe that the interest right now that we are seeing from the bank, it's really because of regulatory certainty by BNM.
Very interesting times is indeed, right? From a high level perspective, Johnson, let's zoom out for a bit. What are the main types of tokenized money that we're dealing with, and what are those that may come to Malaysia? How do you see them potentially influencing not just, the Malaysian financial sector, but also the global financial system as well?
Yeah, of course, I do not have a crystal ball, but looking at the global trend and also taking cues from BNM, especially from the recent consultation paper that's just being released, I think it's very clear moving forward. When I say moving forward, I'm not saying that 2025, most likely 2026 or 2027, we'll be seeing either one of these three forms of tokenized money being implemented or at least being adopted in Malaysia. It's either CBDC, tokenized deposits, or otherwise will be a stable coin. One thing that we want to emphasize is that these three forms of concept that we are talking right now, whether is it CBDC, tokenized deposit, or stablecoin, these are not actually being designated of payment instrument yet. In other words, you are not able to actually use it as a legal tender, use it for any form of payment or even remittance purposes. But if we actually zoom out a bit, looking outside from Malaysia, if you're looking at our neighboring country, whether it's Hong Kong, Singapore, or even US, we can see the trend is certainly coming, whether it is stablecoin, whether it is tokenized money, or most importantly, is actually the concept of CBDC. So I really think when we are looking just some years ahead, 2026 or 2027, chances are at least one of these forms of tokenized money will be adopted and will be recognized in Malaysia as well.
Thanks, Johnson. Now, you've mentioned a few kinds of tokenized money.
Yep.
And let's dive into it one by one.
Yep.
Perhaps, Khai, you can just bring us through what a CBDC is. What does it actually stand for? And
Okay.
how can we understand it?
A, B, C, D.
It's a mouthful. CBDC, I used to get it wrong all the time, right? To pronounce it, to even say CBDC. But essentially, CBDC means, or rather, it's an acronym for Central Bank Digital Currency. Essentially, think of it just like your hard, cold cash. But instead of being hard and cold, it's now in digital form.
Mhm.
It's just our fiat money, but in an electronic form, and in this case, it is issued directly by the central bank. As its name suggests, it is a token that is issued by the central bank and not by any commercial banks.
Yeah.
In this case, think of it really just like your hard cold cash, but instead of it being hard and cold, it's now in digital form. So it's essentially a digital form of central bank money. It carries the same legal status as cash, denominated in ringgit, and central bank digital currency is supposed to be packed 1-to-1 lah. So 1 ringgit of CBDC is supposed to be equivalent to 1 ringgit in fiat terms as well. It carries the same legal status as cash. So unlike cryptocurrency, stablecoin, or tokenized bank deposits, which are issued by private entities, CBDC is essentially public money, just in digital form and very much programmable. Because ultimately, what's powering CBDC is the blockchain technology. It's a distributed ledger technology behind it. And hence, just like any other cryptocurrency in a sense, while it's not volatile, it's packed 1-to-1, the value is always stable. It enjoys the feature of programmable blockchain technology in the sense that you can incorporate, you can embed a smart contract, you can build a smart contract on top of it. So that makes it programmable without the volatility of cryptocurrency.
Yep.
Right. What's one key difference between that and your e-money?
I would say it's in terms of the issuer. E-money at the end of the day is issued by commercial banks, right? It can be issued by technically anybody. An e-money issuer, as long as you're licensed by the bank, you have the necessary infrastructure, you have the necessary technology, and with the approval and sanction of the bank, you will be able to issue electronic money. So it's not on blockchain, whereas a CBDC is issued by the central bank.
And then the key difference between, as you mentioned, CBDC and also e-money, the e-money, we always see it as like M1 money. This is because e-money is actually money that you actually owned, whereas we are always seeing CBDC as M0. Because CBDC, there's only one company, there's only one entity, which is the central bank. They are able to actually issue CBDC. Whereas right now, you can always convert your money within your bank and then convert into e-money. You can just transfer that into your Touch 'n Go account or to any wallet that you like. So this is why for lawyers, they always see that as M1, whereas CBDC is always M0.
Right. So now, further to that, what makes CBDC significant? And will Malaysia ever have a CBDC of our own?
Yeah, I think so. If I'm able to actually make any form of educated guess, and I think that's because just now we mentioned there are actually three forms of tokenized money, right? There's CBDC, there's tokenized deposit, and also stablecoin. If I just have to make an educated guess, I would really think that any form that is going to be first recognized, first properly adopted by Malaysia is definitely going to be CBDC. The reason because CBDC, they actually, number one, is issued by central bank. In other words, central banks, they have full monetary control over the monetary flow within Malaysia. And most importantly, I think one of the key things that CBDC, they are able to actually afford that none other than whether is it physical cash or otherwise e-money, they have this particular feature is the traceability and most importantly, transparency. In our previous episode, we mentioned what is very special about blockchain is everything is quite literally transparent. As long as you know how, depending what chain that you are talking about, you will be able to actually see the entire transaction from end to end. This is one feature that neither our physical cash or even e-money, we have this level of transparency. This will be able to actually resolve some of the long-standing issues in Malaysia, and then this will actually provide almost immediate solution. The first one is certainly, for example, tax evasion or even money laundering or any form of illicit financial flow. Why is it so? Because the way of having CBDC, there is no ways for you to have any off-the-record transaction. There's no way for you to actually do something on-chain without being noticed.
Yep.
So I think this is one of the key and most compelling reasons for our nation, to be honest, not only in our nation, but almost every country to eventually adopt CBDC. Because if they want transparency, if they want to see money flow, if they want to find out where is the gaps, if they want to have full control over the monetary system in Malaysia, in each jurisdiction, in each country, CBDC is the easiest and the fastest solution. This is why I think that there's a very strong, compelling case for CBDC to really be implemented and large in Malaysia.
Yeah, that definitely makes sense. And we know that and we see that the Malaysian government right now is on the trend of, going towards greater transparency,
Yep.
clamping down on illegal transfers, money laundering and stuff. Now we're clear with CBDCs. Let's move on to the second type of tokenized money that we've spoken about, the tokenized deposits. This term might sound a bit technical, but to the public, Mr. Khai, can you explain in simple terms what are tokenized deposits and who should actually be paying attention to these things?
It's not as technical as CBDC, right? But at the end of the day, tokenized deposits, again, as the name suggests, it is your deposit, but now in a tokenized form. Again, it's deposit in digital form. Essentially, Johnson mentioned just now M0 and M1 money, and he said that tokenized deposit is an M1 money because essentially it is money that each and every single one of us, you and I, own, right? So we go to the bank and we put our money, we deposit our money into our bank account. And instead of just leaving our money inside there, tokenized deposit then allows, or rather not allows, but through tokenization, the banks will perhaps issue you digital twin or digital representation of your deposit. In this case, I've deposited 1,000 cash in a bank, and I should be getting back token representing that 1,000 ringgit cash that I have. And I can actually use that token to transact. I can use it for whatever purposes, to settle payment, to purchase stuff, to make fund transfer or whatever. And it's supposed to be able to settle instantaneously. So you made a comparison just now between CBDC and also e-money, right? In this case, I would say that e-money, we don't talk about technically, but rather in terms of the use case, in terms of the feature, e-money is actually closer even to a tokenized deposit. But in this case, the difference between e-money and also tokenized deposit, as what I've mentioned just now, at the end of the day, e-money is not blockchain-based. It's not powered by distributed ledger technology, whereas any form of tokenization, including a tokenized deposit, they are powered by distributed ledger technology. And hence, they will be programmable, same thing. You'll be able to build smart contract on top of it. And because it's blockchain-based, you're not restricted by the restrictions of traditional, conventional banking system. You're not bound to bank's operation hour. You can actually transact 24/7 if you would like to. And legally speaking, when it comes to tokenized deposit, following our Malaysian law, because only certain groups of people are able to take deposits, right? Typically, only your financial institutions, banks, they are licensed under the Financial Services Act, licensed by the BNM to take deposit. So naturally, only these groups of people who are actually legally speaking can take deposits, are able to issue tokenized deposit to you. So in terms of tokenized deposit, we see that it creates great interest. Or rather, personally, I think that it creates great interest or it creates great incentive for financial institutions, those who are already currently licensed to take deposit, to really look into this and explore how can they incorporate this feature into their service offerings. At the end of the day, we all say that you want to have first mover advantage, right? Financial institutions, they wouldn't want to lose out to fintech companies.
Johnson, back to you.
Yep.
Now, you guys mentioned that on the day itself, when the discussion paper was out, many banks approached you, both traditional and digital banks have approached you and your team to seek for legal counsel on these things, right? Are banks paying attention to tokenized deposits? And practically, how can a bank implement tokenized deposits into their existing systems? And what do they gain from doing that?
Yeah. Thanks a lot. I think that is a very important question. The reason because in Malaysia, at least based on the consultation paper that's being issued, it's very clear, as mentioned by Khai, only banks can actually issue tokenized deposits. The moment this paper is actually being released, we can actually see that there's a great interest by different banks to actually wanted to explore. And most of it, to be honest, they just want to understand what does it mean for the bank itself, and also how can they take advantage and how can they implement that. Just now, in the discussion earlier, I did mention transparency. Transparency is one of the key features when it comes to blockchain. And then another feature that neither e-money or any form of online transfer or even hard cash will be able to replace is actually almost instant on-chain transfer. Why do I say so? So if you have any experience actually dealing with any form of crypto, we all know that when we are talking about crypto transfer time, we are referring to seconds, literally not more than 10 seconds, below 30 seconds, depending on the gas fee that you are paying. But if you have ever made cross-border transfer before. I mean, back then, I remember when I was studying in the UK, and then I need my dad to send me some money for my allowance. And then my dad was telling me he had already given the instruction to the banks, and then banks has to wait for another 2 to 3 days for the money just to be transferred to my bank account when I was in UK. Whereas this issue can be totally resolved through the concept of tokenized money. What does it mean? It means that assuming right now banks, they actually implemented this tokenized deposit feature, my dad can give instruction to the bank to say that, look, I want to tokenize my deposit. And then with that, can you please do a cross-border transfer from Malaysia Bank to, for example, Barclays Bank or JP Morgan in overseas. And then with that, I'm able to actually receive money almost instantly. The reason is purely because of blockchain. And then with that, because I'm actually using blockchain, I'm actually using a smart contract, I'm actually removing any third parties, intermediaries. For example, I don't need clearing agents anymore. I can actually reduce out the cost, and also I can increase the speed. And I would say that actually in Malaysia, one of the key reasons why most banks, they're actually looking into tokenized deposit is because we all understand that banks in US, they are already implementing, they are already experimenting tokenized deposit. The last thing that banks in Malaysia, they want is, let's say, there's a foreign bank. I mean, they may just use JP Morgan for example. Let's say JP Morgan, they wanted to just transfer tokenized deposit into your bank in Malaysia. You wouldn't want to be the only bank in Malaysia saying that, sorry, I'm not able to accept this because I don't have the infrastructure to support that. And then you'll be left behind, and then you'll be put in a very disadvantaged position. We all know that moving forward, tokenized asset is the way to go, purely because of how transparent it is, how fast it is, and how cheap it is. So ultimately, all banks outside of the world, they will be tokenizing their asset. And then for that to happen, they will be transferring those assets, transferring their money, transferring their deposit into your bank account.
Now, finally, before we wrap up this episode, Khai, this question is to you. What is the key difference between CBDCs and tokenized deposits? We've learned a bit about both. And for the listeners out there, who should be the ones paying the most attention to which?
So from a features perspective, they are pretty much similar, right? They're all one-to-one in a sense. They're not volatile, they're blockchain-based. So the key difference between CBDC and tokenized deposit really lies in the issuer. So we said that just now, CBDC can only be issued by the central bank because they're M0. Tokenized deposit, on the other hand, can be issued by commercial banks. So they are M1 money because they're money that belongs to the users or the customers of the banks. So in terms of who should be paying attention, I would think that there are 3 groups of people who should be really paying attention to the development in this space. When it comes to CBDC, naturally, because only central bank can issue it. So, and the usage of CBDC most of the time, if we are looking at the papers, the discussion papers, even, and also a lot of the industry players, what they are saying is CBDC. The focus right now is on wholesale CBDC. So when it comes to wholesale CBDC, how I see is immediately it will impact large organizations, and especially perhaps companies with presence in multiple jurisdictions. Wholesale CBDC will be able to help them because they will need to transact large amount of money across different countries, and perhaps to even tap into the money market as well through wholesale CBDCs. When it comes to tokenized deposits, naturally, banks would have the biggest interest because they are placed in a position where they can tap into it almost immediately the moment tokenized deposit is sanctioned, and they are able to issue tokenized deposit. Last group, naturally speaking, would be the tech companies, especially those who are providing tokenization technology, because now this is the time for you to shine, right? Banks, I think for them to, and for anybody, even not just banks, anybody who wants to tokenize anything at all, the first thing that they need to get in their hand would be tokenization infrastructure and also the technology itself. For them to develop their own capabilities in-house, I believe it will take some time. So if they really want to move fast, the easiest way moving forward would be just to form a consortium or to enter into a partnership or collaboration with a tech providers. So we think that tech provider will be a unique, tech provider is in a unique place to gain benefit from this initiative.
Thanks, Khai. And now that wraps up the end of episode 28. Today we explored two major forms of tokenized money, CBDCs and tokenized deposits. And in the next episode, episode 29, we'll be diving into stable coins along with regulatory risks, technical challenges, and the broader implications for Malaysia's financial ecosystem. So stay tuned for episode 29 with these guys again. It's going to be equally, if not more, fascinating. Now, this has been the Legal Insight Podcast by HHQ. My name is Zach, and we look forward to seeing you in the next episode.